Hello and happy Sunday, the 22nd of March. Welcome to all the traders who follow me in the communities that I serve. Glad to see you and thank you for taking the time to come to this update. If you find something valuable in here or you know somebody who would find something valuable in it, please like, subscribe, and share it to them as we get more people who are getting this information. Um, let's first look at what happened this week and what potentially could be happening next week. Um, FOMC this past week happened March 18th. The Fed had a hawkish hold. The Federal Reserve kept interest rates steady at 3.5 to 3.75%. But the real catalyst was a summary of the economic projections, the SEP. The effect is that the Fed revised its 2026 inflation forecast upward to 2.7 from 2.4 and signaled that only one rate cut for the entire year. The market's reaction is U.S. benchmarks gapped down severely. The higher for longer narrative strengthened the US dollar, which acted as a massive headwind for both equities and dollar denominated commodities. And we're going to see that in the charts, folks. Escalation in the Middle East is also another catalyst. You see Trump messaging back and forth with some of the powers that be in Iran. We're going to bomb your oil fields. And then Iran saying we're going to bomb U.S. controlled desalination plants, getting ugly. But tensions involving Iran reached a boiling point with those threats, especially in the Strait of Hormuz, which is a choke point for 20% of the world's oil. The effects this created a supply shock premium. Brent crude spiked to $116 a barrel overnight. The market reaction was the S&P sector finished significantly. The market reaction, the only sector in the S&P, right, was energy. Everything else was red if you look at the heat map. And energy was up 2.16% on the week. However, the energy tax on the economy is obviously bad. So when you see those rise, that's bad for the economy. So uh, February's CPI and sticky inflation data came out midweek. The annual inflation rate holding at 2.4%. But monthly core figures, excluding food and energy, remained stubborn. The effect is that the confirmed Fed's cautiousness stance, because of this data, didn't show the meaningful cooling. It removed the Fed put, the hope that the Fed would rescue the markets with quick cuts. So that is gone. Market reaction is bonds rose as investors price an aggressive path for interest rates, causing growth stocks in the Nasdaq to underperform. And again, we'll see that in the charts. Also, globally, central banks have all become hawkish. Our Fed, the S&B, the Bank of Japan, the ECB, all echoed concerns about rising energy costs due to the supply shocks. So this is a world economy, folks. That's this past week. In the coming week, it's CERAWeek. That's CERAWeek. That's energy at Davos, if you don't know what that is. It's the most influential energy conference, which begins Monday in Houston. The catalyst is you're going to expect that high-level commentary from oil CEOs and Nobel laureate Maria Corina Machado regarding Venezuela's reintegration into the energy markets after we removed dictator there. Market impacts what they say and what they do will directly impact WTI and Brent crude. And as you said, oil shock has dropped the markets. We have flash PMI data on Tuesday coming out, global inflation reports on Wednesday and Friday. Again, these can affect the markets. This coming week is post triple witching week. So last week we saw a massive $5.7 trillion in options expiration, which is known as triple witching. And then the repositioning this week will move the markets. Really, the one of the significant things that's not talked about wasn't in the news is the S&P 500 is currently testing a potential setup on a death cross. Price moved below the 200 moving average, which means we are either in corrective territory, it has to rebound, or we start a cyclical bear market. And we'll talk about that in the charts and talk about what that death cross means. Um, so let's get into the charts, folks. Again, if you have any questions or comments, you can put them down below or reach out to me in the appropriate group as we do this report. All right, getting into the charts. So we always start with the indices. And guys, when I'm talking about levels and potential trade plans, this is for your education and entertainment only. These trade plans are plans that I would be looking at, and you need to make your own decisions and do your own due diligence. This is not financial advice. Okay, the Nasdaq. Since last week did exactly what I said it would do. If it threw back, we were going to test this level. If you remember from last week's video, and guys, all my stuff's recorded. You can go back and look at it. So we have tested this level. We pierced a little bit deeper, and it held. So look at where this held and that held about the same level. So this 24,000 zone. If we drop a little bit further, we have a key anchored VWAP from that is April 2025's drop, could be the next support level if we don't get a positive catalyst out of the Middle East as we go into market openness this week or early days in this week's market. We're probably going to test 23.5, and then below that next support level is 23,000. We did get a little bit of a relief bounce when Trump said that he was things are operations are have ran out of target and will probably end soon. And then the very next day he talked about escalation. So with this guy who fucking knows, right? He's the worst president in the world to do any kind of stock trading under, whether you like his politics or not. Past presidents I've traded under were much easier to trade with. He throws landmine tweets out there all the time. But for the traders that follow me, I called this 25,000 short to 24,000 trade plan, which hit. And then if you follow me on social media, I talked about um, me buying this bounce in the Nasdaq. So you can check out my reels. We'll see. Actually, I did it in NQ futures, so the pricing is a little off. But those that followed the trade got when I'm here 500 to 1,000 points. All right, that should make your day because this week has really been. We've had a couple good trade plans, but really it's been the week of busted trade plans. The thing that you got to understand, guys, is I talk about this all the time. Overall market pressures apply to everything, and then you have sectors that those stocks or instruments sit in, apply, and then you have the individual instrument or stock catalysts. The market pressures have been so heavy, it's been crushing good trade plans. It's how it goes, right? You might have a good little boat in the ocean, but a huge tidal wave can take it out, right? So that's the nature of it. But make sure if you took small losses on trade plans this week that you have a conversation with yourself in past trades that we've done in the last year that were ran up very much, that you didn't leave a lot of unrealized profit on the table. All right. Because there will be, even if we turn bearish here, there'll be selling opportunities. And when we turn bullish again, you have to learn to take profit, guys. So right now, we're looking at if 24,000, we're sitting in that box. If we reclaim it and close above it, it will stay green. If we close below it, we'll turn it red as resistance. Then the next stop is 23,500. So let's get into the S&P 500. I'll stay on the hourly chart. I think it looks cleaner. So the next this did exactly what I said it would do. You see this zone that I said last week would probably test, and it did, and we made this support box. So that wick, we've passed these buyers into this box and held at 6,500. We did pierce it briefly. That is known as a false break if it doesn't close below. Downside support, this VWAP here is the April 2025 drop when we had a severe drop back last year. And that is the volume weighted average price connected to that. So that is the next support zone if we decline again this week. And again, I gave you the catalyst potential, but the biggest catalyst is Trump in his mouth. So um, overhead resistance, there's a lot of it for us to regain. We will not, and I've said this for weeks, we will not see all-time highs until this war is over, if we see all-time highs. So we are in this should be a green box, support box right now. If that fails, then we head a little bit further down. But the thing that I talked about in the report is the death cross. Now I've threw in two more EMAs in here that are important. Let me double check something here. Yep. Okay. So go back out to the daily because that needs to be measured there. You can see that in this, I have a lot of moving averages. Let me take some off to clean it up for you. Ones that I don't, I need that one. I need that one. Okay. So I removed that one. So green are tied to critical points and drops, right? That's important, like the throwbacks. But the blue is 20, the 9 is yellow. But in terms of desk, the purple and the pink. The purple is the 50 day moving average, and the pink that we identified and report around 6,600 is the 200-day moving average, which is the industry standard for measurement of bullish and bearishness. We have fallen below that. That is not a good look for the S&P. You can see the last time we fell below it was that the tariff shock here, and then we reclaimed it. Dropping again is not good, but technically speaking, the death cross is when the purple line crosses the pink line. Now, price action will have to continue to decline in order for that to happen. But what happens is when you see that purple line cross that pink line, that is known as the death cross, and that starts a bearish cycle. Okay, so we don't want that to happen. We need, otherwise we have 2022 all over again, guys, where we just continue to chop downwards. And as things are going worldwide, that just might happen. So you need to hedge positions, you need to learn to short. Um, the Russell 2000 has actually been a little more resilient, but it did come down and test this level again that we talked about and has held downside support at 2,400, upside resistance definitely at 2,600, and of course 2,500 overhead. But it's shown a little more resiliency than the others in the small caps. But we have, like, again, support 2,400, resistance 2,500, and 2,600. This is the same April 2025 anchor VWAP, which is 2350. If we have another shock, that's probably where it's going to head. Bitcoin, I've told you that this was a death trap. Death trap. Got death cross in my head. Bear or bull trap. Not to buy it. Everybody was excited when this happened. Guys, stay out of it. I disagree with all the Bitcoin bulls that we're about to set an all-time high. No, we're not. If you're interested in a trade plan, I think the buys are between 59 and 60,000, and the crypto experts that I work with also say the same thing, and we won't see any all-time highs in 2026. Sorry. Sorry to burst your bubble. We'd be lucky to see the all-time high anchored VWAP at 100,000. Just a moment of silence for my Bitcoin bulls. Okay. Oil, WTI. Guys, my gray box, how accurate is that, right? Because gaps create support and resistance. Price is just oscillating in here, and I said on the report that my prediction is it's going to oscillate between 91 and 100. Trump does everything he can right now, making behind the scenes deals if you fall down the rabbit hole, because he doesn't want oil over $100. So this will go into the hour so you can see it better. And there's that short trade plan that we called for everybody, and it paid very well. Let's remove that. So right now, $100 shorts with a tight stop loss is very good. And then this 91 or on this chart, because I'm thinking it's the same trade plan here on I trade oil futures. Same trade plan there, but it's like a $2 difference. So anytime we get down to this green box, which would be, 89 to 90, is a potential buy. Again, everything with a tight stop loss. This is the all-time high anchored VWAP. This green line is the shock VWAP, and you can see how that is holding above that. So you could potentially buy that VWAP at 93, run it to 100. Very tight there. But make sure if you were to do something like that, that if you buy that, you have a disciplined stop loss kind of below it, a little bit below it, and then sell at 100 or whatever. So that's a decent trade plan as well. Okay, so that's WTI, but it's very, very sensitive to news catalysts, right? When the war ends and the Strait opens, this thing drops probably down to 70 range pretty quickly. And then although global oil prices won't drop commensurate with this, just because there's been a supply issue, that'll take some time to unwind. All right, let's get into stocks. Google, let's go back out to the daily here. So again, I think Google should be one of the better winners in 2026. But if 2026 turns into a bear market, it's not, nothing's going to be the winner, right? Um, it's flirted in the buy zone that I had identified anybody with a lower buy zone at 280. Um, at this point, guys, I would tiptoe into things in case, because what's going to happen, guys, as soon as this conflict is over, things are going to spike. But at the same time, this could drag on for weeks, and we can only do what we can do. So the lower support zone is 280. Then certainly, um, if it falls below that, you're looking at discount prices at 250, right? Again, if we hear any word nuclear in this conflict, we will see a major shock downward to everything in the stock market and a spike in precious metals. OKLO. Right now, guys, this is nuclear energy. Really good thesis. It did break the IPO anchored VWAP where we set a trade plan. Depending on where your stop loss is, you may or may not be out of it. This current trade plan is to the all-time anchored VWAP is still in there. It's a 1 to 6 risk reward ratio. But really, the thing you got to see there is those two candles closing below that, or actually the third candle now is a sell signal. So if you're in this trade plan, we need to hope for a turn back above that. We need to close above that to regain the buy signal. Is OKLO bad stock? No. It's just terrible market pressure right now. Terrible market pressure. So we will continue to monitor these guys as they drop lower and lower and lower until the markets turn and we'll snatch. We'll take small losses on the way down and then we'll snatch some really good plays and take very big wins. And then our net profit is good. M&P is in the zone I've spoke about for a long time. Um, we haven't breached this level yet. You can see this wick, so kind of the bottom of this box. Absolute downside support is probably at the IPO anchored VWAP, which is the white line. And right now, this is a sell-off on medium volume. You can see how high the volume's been before. If you own it lower, get your stop loss below the IPO. And if you want to lock in more profit, get it right below this box at 48. BBAI, not looking awesome for all the reasons I've explained in other videos. Go back and watch them, guys. The only trade plan that I'm interested in then in this one because they've increased their float is down here around 225 to 275, right? It's falling out of this support zone that we've talked about here, mainly because of two things: increased float and market pressure. Will this thing be a winner overall? Probably. 5 years, we're going to laugh about it when it's at $100, but I'm out of it for now. Watching this zone. Pony actually looks pretty good. You can see I talked about this wick, and this is where buyers stepped in and pushed price back up. That's what this long wick was created. So the breadth of that wick creates a support zone. We almost fell out of it and then we closed back into it. So, and here's what I want you to see. That's institutional level buying on that spike. So if you like Pony, this trade plan that we put in there is still in there. You were in drawdown and now we need to go up. And of course, with all these trade plans, because we're below the all-time high anchored VWAP, which is always red on my charts, that's your TP1. So right now, this is hanging in there pretty good. Um, if you were to buy it this week, you need to get your stop loss, kind of below its pivot swing here. You can run it tight or risk commensurate to you and trail it upwards. So this trade plan, we've seen a couple that have failed due to market pressure. This one is holding in there, and I like that institutional buy candle. Alpha, why is that an institutional buy candle? How do you know that? Because retailers can't create 15 million shares being purchased. See that? That's institutional level buying. Somebody knows something. Um, QBTS, this is all AI and quantum because the thesis is good. It is dropping down. I've got an alert set. We talked about this before at $15. That's the start of this zone and kind of absolute support at 14 where it was a really good buy before. You can see gap support here. So as it touches that zone, might be able to build a trade plan off this. Your hope is you're going long at the right time that the war ends with a stop loss comes at you. And where do we run it to, guys? Say it with me. All-time high anchored VWAP, that red line. That's a potential trade plan there. All right. If you own it lower, where a lot of you guys with me bought it between $4 and $8, you get your stop loss just below that box to make sure you're locking in profit. Um, and for damn sure, you better be break even. This is a long-term hold for me. I bought it way down here. All right. So IonQ. It's done exactly what I said. It's tested this IPO anchored VWAP. We made a traded plan around it. It bounced strongly here. You could have caught money here if you trailed it and then got kicked out, didn't realize your TP. It's testing it again, but the difference is this is the one, two, third or fourth day that it's tested that level, meaning the level is weaker. This trade plan still is valid, but we need buy side momentum to come in, and of course, buying that level with a tight stop loss, running it to the all-time high anchored VWAP. The only thing that shoots us up is overall market pressure releases and rises. Right. Otherwise, if market pressures stay the way they will, this trade plan may fail. But guys, it's worth tempting if you're willing to risk just a little bit, right? So that trade plan is still valid for us, folks. QUBT just looks ugly. I talked about this before. The zone I'm interested in is based around previous price right here between 450 and 550. We are below the IPO anchored VWAP. We are below the all-time high anchored VWAP. We're below the 20. We're below the 50. And as I talked about death cross before, that right there, where the purple line crosses the pink line, is known as the death cross. That's ugly for this stock. If you fundamentally like it, you can buy this lower price zone fundamentally. But right now, technically, this thing is screaming sell because we're below all the IPOs and we have that death cross. Um, quadruple U guys, listen. I want to show you something. Stand by. Get this out of the way. All right. A lot of people are disheartened about this trade. So am I. I got kicked out. This was forming a cup equal brim, or, and then the handle, right? There's the all-time or the first all-time high anchored VWAP. There's the second one. And then if we closed, if we this was a good close, we would close again second. We would anticipate it to shoot up, right? And now, as you can see on this trade plan, I was kicked out, right? We're probably heading down near the 200. The absolute support on this formation is this um, price zone, uh, $12 to $13, where if we continue to get market pressure, it may head. We'll see if the 200 gives it support. But what I want to show you here, guys, you don't believe me on this formation. This is the book statistics. The success rate of a breakout is 95% on this formation, right? I mean, you can pause the video and look at this. And then the rise after the breakout above that brim where the alert is usually an increase 34 to 54% in your trade. 95% win rate. So unfortunately, right now, we're on the 5% of that. If we reclaim those areas with good market pressure, it could potentially this busts the formation once we break this down here. So we're hanging on by a thread in terms of the formation. I'm already out of it. I'll be more interested in buying once we recross this area. And you can see these two VWAPs are coming close. It'd be really strong if the two all-time highs marry themselves. We get a strong close above. We can buy it there. And of course, I'll be on top of it for you, right? I will alert you. Ego, man, the miners are just getting their teeth kicked in with the drop in gold and silver. Ego downside support is below us. This was a strong gap down as gold and even silver gap down. So El Dorado obviously is gold. Long-term thesis for these miners is good. But the next buy zone, guys, is 25 to 27. Let's see, is that, yeah, the all-time high anchored VWAP is here below us at 17, which should be a good buy on the thesis, and then the recent high overhead at 41. So if you're in it, you need to start locking in profit case it drops in lower and then rebuy it later. We all believe fundamentally that precious metals are going to rise, but due to manipulation and other things, they're getting their butt kicked, and we're going to talk about that. So HYMC also, but the thing that concerns me with this formation, guys, is this. So the downside support is probably in this first gap right there. And that's 16 to 20. That gap. Whoops, that wasn't super. Yeah, no, it's accurate. Yeah, right there, that gap. Okay. Problem here with HYMC is this is a double top. One, so that's the first peak. There's the valley. There's a second peak within 10%. Now, as you come down, you see that green line that I made? That's known as the neckline. If that neckline breaks, that means we head down and it broke. Now, technically, it's a 2-day closed filter. It's only got one. If we close another day below that, we're going down to this gap, right? Which provides buying opportunities, guys. So if you've got a stop loss and price raises, you need to get your stop loss right below that. Say price climbs here, get your stop loss below that in case it drops. That is a double top, which is a double top with a neck. And when a neckline breaks, it's downward it goes. Gold, what a drop this week. So if we look at the drop, it's an 11% drop in gold. We do have support here at the 5,000 zone where we pierced it and bounced back up. And then downside support at below that at 4,400 and even 4,200. But this zone here at 4,400 was so strong for so long that it's going to be tough. I actually called the buys at 4,500 here on the drop. So, and we're hanging it. So I called this buy. A lot of people realized, I mean, when it first tapped it, I mean, there was 200 points there. That's a lot, more than 200. And now it's back there. Multiple times of touching it weakens it. So we want to watch volume. Would you buy it again there? I don't know. I don't know. I don't like it as much as I liked it the first time I called for everybody. But 4,400 should be significant support. Good place to size in. Silver. Nothing has changed in silver for me. Just way too manipulated. I don't trade it anymore, and I've traded thousands of contracts in it. Here's your trade plans. I talked about this before. Go back and watch the video. 64 off that wick is a buy plan. And then actually this should be over here at 54. Right here off of this. See that? 64 and 54. And then when you run it back up, 71 is going to be resistance. Of course, the all-time high at 83 and then 100. So watch those two areas. Again, if you want to swing this, you buy it there with a very tight stop loss, be willing to lose a dollar or two just to get a better price because eventually you're going to catch it. Platinum fell through the 2,000 trade plan. But look, guys, the first time, usually when I swing these and I talk about it, I do 100 points. So I said this last video, buying 200, 100 points. Look, went down to 1980 or 1984, ran up to 2165, more than 100 points. And then it didn't support it the next time. Now we're at 1900, it's trying to support it, right? When I do these swings, it's usually 25-point risk with a 100-point reward. Optimistically, if we can get to the all-time high anchored VWAP. So 1900 is the next support level, but really even whereas the really significant support level would be below that is this double set of candles here down around 1734. But we'll see what happens right here. You could be dabbling in this, buying that stop loss right below that wick, and then try to run it back up into these zones. Palladium. Same thing. This trade plan here for last week did the same thing. I talked about that being a buy zone at 1,500, and it paid 100 points, and now it's collapsed the second time. Downward look at pricing. You're going to see support probably around 1,300 to 1,330, right? So if you bought this in around 1,500 and it ran 110 points and you didn't move your stop loss and you took a loss for this, please take a break from trading. Please take a break from trading because you're not following trade plans or discipline and trailing your stop losses, right? You can't buy it and go, I'm just going to hold it until it's $1 million per coin, per ounce. No, you got to take stabs at this, guys. In 2 days, you could have made 100 points on that. And okay, fair enough. Maybe you didn't have a TP in there, but you trailed it. Maybe you made 50 points, and now you're going to look for a better price. And it's same thing for all these. Same thing for all these. Copper is just getting its teeth kicked in. Trade plan failed here at the 550 support. It's down to $5.24. At this point, if it continues to drop, I think $5 is a key psychological price. Copper fundamentally is supposed to have a ton of movement upward with price projections of $10, $11 with the demand in AI infrastructure. But right now, this is an ugly look. And guys, and when there's fear and pain, it's when you buy. When everybody's fearful, that's That's when you buy. So again, market pressures have sucked thanks to Donald Trump and the war. We've hit some trade plans. We've eaten some trade plans, but guys, that is the nature of trading. When we were bull trending, we were making massive amounts of money. Now that we're in chop, we're gonna incur more losses and a lower win rate. So you want to tighten that or sit out. And of course, I'm gonna be on top of it. If you got something out of this video, like, subscribe, and follow. If you have questions, throw them down there in the comment box. Thanks for taking your time to be with me today on our weekend update.